So I think mostly though, we work a lot, we earn quite a bit, but we're spending so much of it on interest. We got into this debt cycle and just to get out of it.
Okay. Do you know what the interest rate's going to be on the HELOC yet?
6.99.
Okay. So the reason that I say that you all look like you're in pretty good shape is your cash flow. Because when you have cash flow and you have a line of credit, then you can start working down debt. Are you into the HELOC yet?
No. So we're still waiting for approval, and it's not actually a HELOC, it's a home equity loan. It's not a line of credit.
Hey.
Yeah. So it's not exactly ideal. That wrecks everything?
That wrecks everything. We can't use that. So let's talk about other options.
Okay, Christy, wait. Can I record this on my end, or can you do it on yours?
I'm recording it now, and I'll send you a link when we finish up. It may take, so if I forget to send it to you, feel free to send me an email and say, hey, I didn't get that link, because it's got to download and then upload, and more times than not, I will forget.
Okay.
So let's talk about why you're doing the home equity loan.
I don't know why we're doing that. We applied for a home equity loan. It's been a little bit of a process. So we've gone through, we were working with 2 different institutions to see what was going to be possible. Everyone was very kind of discouraging because of our credit rating, though we have quite a lot of equity in our home. Rocket Mortgage is so aggressive. They wanted us to refinance the whole thing, and that was not at a much higher interest rate. They wanted us to cash out refi.
Okay.
So it basically came down to we ran out of time with the home equity line of credit that we were tracking to get. Because there were a lot of moving parts. There were some outstanding, there's 2 judgments against me that needed to be included. And though I provided the information, they waited too long. And then it came down to the day before. And rather than reapply, we heard back from the other institution that was offering us a home equity loan. So why does that make it impossible? Why was it good until that?
Well, you're adding another loan. A loan doesn't fix our problems. A loan makes it worse. And especially a second mortgage like you're getting ready to go into, those have a very high interest rate. So I don't know what rate they've quoted you at on that. Do you know what the rate is on your home currently?
4 3/4.
Ouch.
No, 6.9.
On the second?
Mm-hmm.
That's still 125%. So they always are higher than your original mortgage rate, always. Mm-hmm. But it's the same exact thing. It's the same setup. It's to push all of that interest to the front. So you're never able to get out of those loans unless you transfer them or convert them into a line, which they will do. But when you say your credit score is low, what are you talking about?
Mine is in the low 6s, 606. His was higher. His was 750. But still, banks want you to do what they want you to do. We did apply for the line of credit with the first institution, which is our mortgage holder.
Right.
And I don't even remember. It's been such a lot. So we applied for a home equity loan and then for the line of credit, and the interest rate was higher, as they are. I think it was almost 9%.
Right.
But I don't know. I can go back and ask our loan officer, what's the difference? Do we need to reapply? Once the line of credit option kind of shut down, we were okay, a home equity loan would still, even if it's more interest, it's still the interest rate, we're paying 30% interest on the majority of this $25,000 in debt. It's breaking the bank. There's no point in our working so much just to pay interest, so getting into anything other than just paying credit card debt makes more sense than not. No.
No, no. That's the whole channel, is to educate people the difference between the line and the loan. So when you talk about the interest rate on a credit card being higher than your mortgage, higher than this second mortgage you're getting ready to take on, higher than your car loan, you are speaking as someone who just is not quite educated yet in how the tools work. The loan that you're getting ready to take on is 125%. That well exceeds your 30% on your credit cards. You understand that?
No. But
Okay.
But
So-
let's keep going.
Well, this is why we wanted to talk to you, because I think we've both been pretty much brainwashed into,
We are.
because we're both in our like mid 40s, and it's like the whole up until now, it's just been like do what the institutions want you to do, so that they keep on dangling the carrot, and you keep paying and paying and paying and paying.
Right.
And we're trying to like re-educate ourselves on this, and it's.
And you do have to. It's a complete mindset change to understand what it is that they're actually offering you and why they're offering it. I mean, it makes sense why they're pushing the loan on you right now. I would expect them to do that. The best suggestion that I can make for you is to go back to that loan officer and say, we don't want a loan. We want a line. Now, it sounds like that you feel like that you're in a real position that you have to move. You have to do something.
Definitely.
Okay, so I would rather, and if I were in your situation, I would get a small line of credit. I would get, I don't even care how small, let's say it's a 10,000, just enough to cover your monthly income. I would do that and work out of a baby line before I would move into what you're getting ready to take on. The interest rate that you're paying is not only well over 120%, but it's also the origination fees that you're going to be paying just to pick that loan up. So your all's wealth just went from maybe 0 to 0 if you move into a loan like that. Now, if you are able to have that converted into a line, that would be excellent, because I was going to show you what you can do with a line. You cannot do what I do with a loan because it's a closed-end product. You can't, you put money in, it's stuck there. You cannot pull it back out. But with the line, you can. So the point being, we want revolving lines. Let's talk about your credit cards. Do you have any that are linked to your checking account?
Linked as in like we can make payments from one to the.
No, linked as in you can use it as sort of an overdraft protection.
No.
Who do you currently bank with?
We just use a small local bank.
Okay. And have you checked with them about getting a line of credit?
So I did ask them. I mean, I think what happened is they had a promotional kind of home equity loan or something product that they were promoting in like December and January. So
like no closing costs or something.
Yeah, 6.9% and no closing costs, and which is significant. So we sort of started the process, and then a friend of mine told us about you and your work. And so we had already kind of started this process, and then we learned about your work. And then I applied for a line of credit through this other institution, which is a credit union, also a local one. And it was all approved and really ready to go ahead. And I think that we were approved for $25,000. And then because the date passed, and it wasn't something that was like going to end it. It was just the date passed, and then we had to reapply. And at the same time, like within 12 hours or so, I heard back from the other bank, and they were like, hey, we want to go ahead with this loan, the home equity loan. Shall we, get it done? And I was like, yeah, we should, not really understanding. It would have been smarter to carry on with the line of credit and thinking It was just too difficult. And I work 70 hours a week and I have 3 teenagers. And I'm like, I just have to get out of the fire here. I can't think about this anymore. So it wasn't a good choice. But I mean, that's kind of what happens is like anything is better than this situation, but it isn't really anything. So nothing is signed. I mean, we can go back and say, hey, this isn't what we need. And if they say, no, sorry, we can't convert it, we could go back to the other institution and, you know, begin that process. It just feels like every month is like we started using credit cards and paying them off instead of using all of our cash. But then, you know, you have one big expense and you're screwed for the month or 2 or 3, and then it doesn't work. Then we end up with just higher credit card bills than what we started with.
Right.
So it just feels tenuous.
Yeah.
Yeah.
And it will until you get into a line of credit. Once you're into the line of credit, you're going to feel the freedom of using your money again. Right now, you're feeling tight because you're into nothing but payments. You're just making payments and you're getting ready to take on another payment. And that's why it's just going to get even more stressful, is because you're going to be stuck in another payment that's going to be huge for years and years. That's not the way the line of credit works. The line of credit is almost always going to pay off within a little while compared to the loan that's set up to make these certain payments. So if you can call that bank, ask them if they can just convert that into a line. If they say no, I would go right back to the other bank and say, I want to pick up where we left off here and get that started. Because if it's just a line of credit, which it sounds like it's a home equity line as well, you're going to go through the process. But if they had no closing fees, stuff like that, that's what I said. The line of credit always wins. And I know that you feel like you're strapped for time, but I don't see where you're strapped. Not if this number was correct.
Those are right. Those are correct.
Okay.
And I think the main issue with that is just lack of discipline. I think on our part, it's easy for us to like, you know, we'll just kind of get overwhelmed, and the kids like, can we eat out? And then we're like, you know, so it's
right.
It you know, I think if we've never been like super good at being, you know, like our groceries month to month like fluctuate pretty wildly. Right. Just
it's pretty consistent.
I understand because I'm in the same situation. It's not that we don't have life happen and that we don't want to care for our kids. And, you know, I've been working on an online course this morning, and that was one of the questions is why, what was the change that made you decide that you were done with this stressed out debt situation? And I was sick and tired of telling my kids no. I was tired of wondering, you know, how I was going to make my payments, but then wondering, you know, or worrying that they were going to need something that there was no way I could provide. No way. And that's why it just was, I was done. Whatever it took, I was going to get out of that situation, which is where my prayers started. But I feel like that when I got really active and I started looking for answers, that's when I came across Velocity Banking like the next day. And it was a game changer for me. I completely understood it from the very first video. I had to pull over and watch it again, but I knew there was something in that I'd never heard of before. So that being said, I personally don't see you all being in debt over 6 years. I mean, I see the house and everything easily being eliminated, the debt on it. So that's what I'm saying. When I say you look like you're in debt, you don't have that much debt. You don't.
Yeah. So could you just like if
go through as if we hadn't done the right thing and had a line of credit? I wish you hadn't taken those down, because if we see that, you know, even if neither of these two banks we're working with will give us a line of credit, there are all these other places but the problem is, as far as Rocket Mortgage was concerned, our credit score was too low.
Rocket is a joke and the worst bank you can work with.
Yeah. No, we didn't. We were never going to work with them. It was good education. It showed us what we didn't want.
Right.
And it opened our eyes in a different way. And we were watching your videos and we were talking with them and we were trying to work it out and, you know, all those things. But we could increase our credit scores if we're very disciplined and then be eligible for a line of credit somewhere else. But we need to be closer to 700 than 600, I think.
Yes. So it depends on what kind of line of credit that you're going to jump into. It could be that you're going to jump into a regular HELOC, which is what you're looking at, which the credit scores usually are good from 660 to 700. Usually 680 is an average. If you're going into a first lien that completely takes over your mortgage, you're looking at a 700. If you're looking at doing the automated system, then they don't care what your credit score is. They're still going to get you out of debt. So either way, you have options to be out of debt. Like I said, I see about 6 years, 8 max. If you do any kind of plan that has to do with velocity.
Yeah. Okay. Well, I mean, do you agree? Like the best thing to do is see what Christy thinks is like the way to do it, and then we'll just figure out how we do that.
So let's say that you do end up getting a line of credit for $25,000. It doesn't matter. Then we're going to look at your credit cards that you currently have that are $17,554. Okay, so your payments on that's 1110. Okay, so just starting with this, let's say that we paid off all of your cards and we put them into this line of credit. And this is your balance now on the line of credit. The line of credit can take all of your income. It can pull all of your expenses. So everything that you make, whenever you get paid, it doesn't matter, would go into this line. All right. So that's your first focus, is that you're putting all of your money, every dime you get, tax refunds, extra checks you aren't expecting, $5 you find on the street, anything goes into this line, because as we bring the line down, our interest rate comes down. And let's give this a high of 14% interest rate. So you're at $85.54 for your balance. Now we're going to figure the interest, and I'm going to figure it off the high, even though the bank is going to average these numbers. They're going to get an average daily. So it's not going to be nowhere near the $17,555, but let's just see to save room for error, 14%. That'd be $205 in interest. Now, if you noticed already, the interest on your cards here are probably running you about $1,500 a month. No, about $800 a month for all of them, maybe more. So you've already saved on interest doing nothing but just transferring it into the line. So you've already started saving the money that you're working for. So let's add this again. Okay, now we're going to add your expenses. Now your expenses currently are $76.75, and we get to take off this $1,110 because this is gone. Okay. So $65.65 is now all of your expenses, and that includes living, mortgage, everything. So you're at 15. $63.24. Month 2, you're going to come in and do it again. $63.24. What does this look like to you?
It looks amazing, and this like as soon as we saw your first video, it was the first time that I was like, huh, this actually kind of makes sense, and I see a path forward. And then like just all the kind of shit accumulated again, just with trying to get everything done and getting all the loans and this, that, and the other, and then just talking to people, you know, from the banks and from the credit union and everything, and you know, they're just trying to cram you back in the box of like, you know, paying double for everything with all the interest.
Right.
And but now I'm listening to you and I'm like, why did I fall for that again? It's just like the conditioning is like so extreme. But like,
well, I mean, it's easy to know why, because you know, if you were the loan officer, because you understand how it works and you know what we're doing and you're in our team, it would make sense. But we you know, you feel beholden to them because it's up to them if they're going to give you, you know, not as if like we own a home and it's an asset that we've paid into. It's like they own our home, we get to live in it, and we get to pay them. So, you know, it's not just fiction. There is truth to it. And also because my credit score isn't, you know, good, it's like you have
your
to.
husband can get a line of credit without you. You
Well,
don't
he probably can do everything without me.
I'm just saying he could pick that up today if we're talking about a basic line of credit at a credit union somewhere. It doesn't have to be on your home's equity. I'm sure you and he both are on the home, right?
Yeah.
Yeah.
Okay. So let's finish what we're looking at here. So it's going to be down to about, say, 180. So 13,069. Then guess what? We get to do it again. We're going into month 3. This would be gone in less than 6 months, easy. Okay, your credit card debt next to your truck. Your truck is even cheaper, so you know it's going to fly by. So in less than 10, 11 months, you're out of debt except for your home.
Amazing.
So if you add your home into that, and you're at about 100, let's say 125, it's not that high for your balance. About 42 months.
Wow.
The line of credit is just a different tool. It's just a tool that was actually meant to work for the consumer more than using a loan, for sure. The loan feeds the bank. The loan is how their bank buildings are so big.
Yeah. Okay. Well,
this is your answer. You guys are in great shape. That's what, when I looked at your worksheet, I was like, oh, an easy one finally. So you just need a line of credit. You just need a line of credit. Once you get it, you're home free.
Yeah.
And 25 is enough. We don't need. Okay. Right. You said even 10 would be sufficient to.
10 would get you started. 10's going to be tough because you have a 9,000 income, and I like to see it a little over. 15,000 would work better.
Okay.
But 17,000 would pay off your credit cards immediately, and you'd be done.
Right. Okay.
Yeah.
Then
okay.
You pick up your truck and start hitting your home. I mean, it's a very easy. I mean, if I had control of your debt today, I'd be jumping up and down because I already have the line of credit, so I would just get busy. And that's the only thing you lack. And however you need to get one, whether it be you and him doing the home equity, which would be nice, but I about bet he could go to a credit union right now and get a $15,000 line of credit with his signature.
Okay.
Now, another thing about the bank that you currently have your checking account with, if you could get a line of credit with them, a credit card, and ask them if they will link that credit card to your checking account, that will serve just like this.
So we do most of our banking is not with the credit union. We do most of our banking with this other small bank,
Okay.
but they do have a credit card that they offer.
Okay.
Probably the credit union does too, because we opened accounts and just deposited like $100 in there when we thought that line of credit was going through. It was all but done.
Mm-hmm.
And
you need to go back and get that.
Okay.
Yeah.
Yeah.
I don't, high right now is 14%. On a line of credit through your home like that is usually 9. So you can see how you would even move faster because you've got a lower interest rate. I don't care if this is 20%. Get a line of credit. You're going to win with the line of credit over that loan.
Because of the average daily balance and paying in all of our wages to it. That's why it. Mm-hmm.
And the thing is, see, that you've got to remember when you are in a line of credit, let's say that you do 1 month and you have major car repairs, $5,000. This line coming down like this gives you access to that $5,000 when you need it. So you're not panicked with, oh my gosh, we just are getting out of debt. We put all of our money into that loan. Now we can't get it out. That's not the way it is with a line. You can turn around and say, well, we'll just take it out of the line and we'll just play catch up here for a couple of months.
Mm-hmm.
Takes all of the stress off of you financially.
With the line of credit, do you need, are they, because I seem to remember the line of credit had, you could take money out like 3 times over. Do you have to get one that's specifically that you can
draw the full amount?
You draw the full amount, put it,
It should be to where you can revolve it as you deem necessary. I have 2. One, I only use one at a time. But the one I'm using, I can roll that thing every day, and I do. Okay. When you get comfortable in a line of credit, I don't care if I have $10 sitting in my checking account, it's going to go into the line because that reduces this balance. When you get comfortable and you find a bank that's going to serve you by giving you a line and linking it to your checking account, you're not ever going to feel this stress that you feel today again, because you're going to know how to use your money. You're going to know what tools serve you now, and you can keep using the credit card that gives you cash rewards. And let's say you put, $2,000 of expenses, your food, your gas, your car insurance, subscriptions, anything you can put on a credit card, gaining the cash rewards. So if you get $100 in cash rewards a month, guess what? You just made $100 because you're going to pay that card off then as soon as the due date comes. There's one little secret to credit cards that I haven't even put in videos yet. When I talk about making multiple payments throughout the month, whether it be $5, $25, whatever you can do in a week, you are stopping their interest, because they calculate the interest based on a 25-day period. But every time you hit the account with money, it stops it and it restarts. So if you're hitting it 2 or 3 times a week, you're stopping the interest. So until you get this line and you get things under control here, if I were in your situation, I would start pouncing on those credit cards every couple of days with something. Like I said, $5 stops the cycle. They have to start it back up again. So see if that doesn't boost your credit score as well.
Okay. That's genius.
That is genius. It does work.
That's amazing.
There's all kinds of maybe little secrets that we're just not aware of, and I'm still learning, and I'm getting ready. I'm actually working on a course that I'm going to have, an online course. that's going to be a major course to where you don't have to talk to me. You get a Zoom once a month and you can literally do the work on your own because it's going to be laid out so perfectly. But these
That's
little, tricks are going to be included in that as well.
Mhm.
But it's just important that you learn lines of credit, what they do, how they work, how they act when you touch them, what's happening with it. And then once you've got that in your head, you're never going to go back to a loan. You're just not, because you know better.
Yeah, right. We made them. Well, I made them.
After
Yeah.
you get this under control, after you get your credit scores up to 700, you need to move into the first lien HELOC. What's the value of your home?
In the neighborhood of like 315.
Okay. So let's say 300,000.
Mhm.
Let's say 300,000. If you're over a 700 credit score and everything's approved, you'll be approved for a 90% loan to value, which would be about $270,000.
Mm-hmm.
They don't care if you use that or not. Guess what? If you need a new car, do you go get a loan at the bank? No, you've already got your line. If you want to put money down on your new property, use your line. That's what's important about having the line of credit available to you, even after you've paid off all of your debt, because you can constantly be growing. I use mine mainly to put deposits into my infinite banking policies. That funds me instead of the bank now. So if I need a car, I go pull out of my accounts. I have one on each daughter, so that as they get older, they're not going to be using banks for cars and homes. They're going to pull them out of their account.
Yeah.
That is what you all need to do as well to get set up to where you're funding after you're done here. You're funding your children, their future. And then if you pass away, when you pass away, everything will go to the beneficiary tax free. So that's what we want to do for them as well. So much information to learn. Keep watching videos.
Will do.
Definitely. Okay. Well, there's tons here, and we'll go back to the drawing board. Thank you so much, Christy.
You are very welcome. And if you think of something you forgot to ask, you feel free to email me, and I'll be glad to answer your questions.
Okay.
Amazing.
Yeah.
Thank you so much.
Perfect timing. Thank you.
Good. You're welcome. Good luck with that.